Good morning and welcome to Market Insights. I am Lavina Emma. It's a beautiful Wednesday morning. Yes, we know it's a great day today, but there's a particular issue that has been affecting our economy right now. But before we get right into that, I am your host, Lavina Emma. So this morning, we're going to be discussing the seismic shift that has been affecting global markets all over the world. Now, stock prices have been plummeting and investor confidence is shaking. And everyone is watching closely, keenly, to find out what's causing these issues now. So now picture this scenario. Imagine waking up to perhaps, let's look at a retiree, waking up to your retirement savings, your investments, and all your financial security dwindling before your eyes. Now that has been the situation affecting the global stock markets right now in the United States, in Europe, and in Asia. I mean, the stock markets in Japan, for example, the Nikkei has dropped to its lowest of 12.4%. That has been the lowest figure since 1987, and investors are worried. They are deeply worried about these new figures affecting all the global stock market indexes. So the question on everyone's mind is, what caused this sudden and sharp downturn? Now, is this a correction that is affecting an extended bull, that's an extended positive growth in the market? Are we just seeing the usual upturns and downturns of the markets, or is this something that people should be more worried about? Is it the beginning of something more serious, like the 2008 global financial crisis? Well, we hope not. So on the program this morning, I'll be discussing the global financial markets and how it's affecting stock prices all over the world with a development expert. So my guest this morning is Dr. Idahosa Osamanze. He's a development expert and a social commentator. Thank you for joining me on Market Insights. Thank you for joining us, Dr. Idahosa Osamanze.
Lavina, pleasure being with you on Market Insights.
Yes. So, yes, I mentioned during the introduction the global stock market prices, how stocks in different countries, from the United States of America to countries in Europe, been affected by this downturn in the prices of stocks. And everyone is worried, not just investors, not just economic analysts, but we are all worried about it. Now, okay, before we get right into these figures now, what do you think caused this sudden downturn in the prices of stocks globally?
Well, I think it's important to note that if you look at the capital market globally, it's driven a lot by speculations. And as people are speculative about a market, what that means is that it's a gamble. When you think today, and it's okay, what's happening in this part of the world, how is it likely to affect what the value of the stock is? And the investors, like you know, the primary purpose of every entrepreneur is to make profit. And so you are looking at it and say, if there's a shock here in this market, likely it's going to affect what I have. Do I need to move my money from here and put it somewhere? So these are really the issue, that speculations that is going on, especially around the United States of Americans market. Like they say, if America sneezes, the world catches cold. And I think that is what it is really at the moment.
Okay, so yes, we've seen the prices. Like I mentioned, the Japanese Nikkei is down 12%. That has been the lowest, even though a lot of investors have said the Japanese yen was currently, the interest rates was quite low. But that being said, this is 12%, 12.4% is quite low. But how does this crash compare to previous market crashes in like, for example, the 2008 financial crisis?
Yeah, but I think there are two different scenarios playing out here. What we're dealing with right now globally is the cost push type of inflation, where, of course, you're seeing prices of goods and commodity rising, and the buying power of consumer declining. So what this means is that many people do not have disposable income to buy even necessity as we speak. And that's why you can see globally there's a lot of mass protest and riots going on everywhere, because people are saying, oh, there's hunger and people can meet their everyday need. What that means for corporations is that if you cannot meet your daily need, the chances are that you will not be able to buy from those who produce. And if you are not buying from those who produce, the economy largely slowed down. And so the potential for profit dips. So that's what you're seeing. This is why people are talking about the recession, possible recession in the U.S. Economy. Although some analysts came out to say that I saw Goldman Sachs article yesterday that government will have to do whatever it takes to intervene in that market so that the market does not experience recession. But this state intervention in the capitalist market, for me, is something that is really quite odd, that we are supposed to allow the forces of market to determine what prices are. But here, you are seeing frequent state intervention. So statism is getting stronger and stronger by the day. And this is because, I have always argued this, is that we have not allowed the market a free hand to determine its course. And once we don't allow the market the free hand to determine its course, and you have these terrible interventions here and there, you only raise an army of very lazy people, which of course the world has cultivated for a very long period of time in the name of democracy or social democracy, that you're having people on the extreme left who are believing that state must be able to put food on the table of every single man. This is not the way capitalism should drive naturally. So these are the things that we are seeing playing out, that people are looking at the market and they're looking at, oh, well, if there's recession in the U.S. economy, likely, of course, it's going to affect global, because also don't forget that globalization, which has brought the world together in one small village, makes that whatever that is happening in one part of the world affects the other part. But when you compare that to what happened in 2008, which of course was the issues of morality, if you like, you can call it the issues that had to do with the integrity of a big company in the United States of America, who was falsifying his book, and then, of course, using it as a pretext to borrow more money from the bank when the money was not anywhere. And by the time it became open that the money was not in anywhere, of course, the case of Aaron is quite clear to a lot of people. So many of the people who put money in Aaron suffer a loss, and so some of the bank went under. And that affected the global economy, of course, which people talk about the meltdown that happened in 2008. So there are two different scenarios playing out here. But here we are having serious food crisis that is occasioned by, number one, the pandemic that came to the world in late 2019, 2020, that created a lot of glut in the supply chain when logistics was greatly affected. And that has doubled the price of consumer goods all across the globe. And this doubling of consumer goods is making it not affordable to a lot of consumers. So this is really the problem, and that's what the world is doing. And climate change also has not helped a lot of issues. We're also seeing shift in the planting seasons and the rest of it all across the globe, and the food supply chain is also hugely affected by the climatic conditions that the world is facing. The rising cost of energy is there on the other side. That, of course, the cost of electricity, energy, petroleum is getting higher on a daily basis. So this is taking the prices of goods and services off to the rooftop, and that's really what is responsible for the challenge that the market suffers at the moment.
Yes, thank you for that, Doctor. Now, okay, we know, like you mentioned, the stock market has some positive days and some negative days. We call the positive days if the market closes positive, a bull turn, or it closes on a positive outlook, so it's bullish, and if it's negative, it's bearish. So now that being said, do you think these issues affecting the stock market is, you think is a correction after an extended positive growth, after an extended bullish growth, or is it the beginning of something more serious?
Well, I think we cannot say with some exactitude to say, okay, it's a trend. We cannot also say, oh, this is something that's going to continue. But I think what the indicators are here is that players in the market are also watching. There's a whole lot of sellout that is going on, really. And all of all this is happening because people are speculating, like I said to you. So it's a speculative market. People just want profit, and nobody wants to suffer any loss. So we can't fold our hands and say, as things are turning, people must continue to move their resources from one point to the other. And so you are looking at it. When this happened the last time, a whole lot, people were thinking it was going to self-regulate, and then into place. So, like I say, people say we learn from history. So nobody wants to fall a victim 2 times. So I think these are the issues that we are seeing. But we do hope that with some of the sanity that come into the stock market and the regulation becoming more tight and real more transparent, a lot of the 2008 issues may not happen. But I think on the part of many corporations, there's a need to tighten or strengthen governance, which is actually one of the factors that is responsible for collapse of market. When ethics are weak, morality is at the back, people are not as transparent and accountable as they should be. That casts doubt on the integrity of the market, and that can weaken its potential. But as long as people are transparent in their dealings and the books are not doctored, I think the possibility of the market bouncing back is also very quite high.
Okay, yes. You mentioned, yes, we know this is a capitalist, we're running a capitalist system here. But do you really think the government can put some actions to mitigate the impact of this impending crash, which has currently started?
Well, I don't think there are government issues because stocks markets are driven by private investors who puts in money. All that government can do is, of course, strengthen regulations to ensure that those who play in that field, they are doing very well. And I think that's all that it is, to see that there are transparency. Rules are made by countries, central banks to determine how some of all these movements are done within the market, and you have regulators who are there that have been established by law to ensure that they are oversighting whatever that is happening in the market. National legislators, of course, are also there playing the role of oversight to ensure that shady deals do not happen in the market, that is as transparent as it's portrayed. Now, once all these things are happening, then there's a lot that can be done. And I think, for example, for us in our own market, really, the oversight seems not too very, very strong. And I think there's a need for, especially the National Assembly and the regulators of that particular industry, to work a lot harder. Take, for example, in the last month, about 14 stocks were suspended in Nigerian exchange, and the reason was that they refused to submit their report as at when due. And this is not healthy for investors. So if people are putting money into a business and we know the financial year, there should not be any rocket science in turning in your report as and when due. And I don't think suspension is just enough. And I think penalizing some of the people who are behind some of all these things, especially the board, to ensure that there's transparency. And that is the only thing that can strengthen investors' confidence in some of these stocks that are traded on the floor of the market.
Okay, thank you very much, Dr. Idahosa. So just before we round up, I want to get your final thoughts on this. For small businesses and entrepreneurs who have also invested in these shares now, how can they protect themselves during this economic downturn?
Yeah, there's a whole lot of shock absorber that are there for investors. Like we know also that the game is a huge risk. So sometimes you gain, sometimes you lose. You don't win all the time. But I think that by and large, if there's no panic in the system, it can self-regulate. But if there's huge panic, as people sell out, then of course we can envisage a crisis. So for me, there's nothing to panic. It's the normal market way. If you also look at history, really, and you find that these are not things that are new in history. So like they say, you see repeated event, similar event that happened in history. So it has happened before, it will happen again, and the markets go down, then it bounces back again. You have the serious period of debt crisis, then followed by a period of high knowledge productivity, and then you have again some period of prosperity. So if we lose today, we can win tomorrow.
Okay. Thank you very much, Dr. Idahosa Osamanze, for joining me on this segment of Market Insights as we discuss the global stock market crisis and how we can all protect ourselves. And thank you for sharing your insights into these matters. It was great having you on the program.
My pleasure always.